Hello, Nasdaq followers, and welcome to another episode of Trade Talks. My name is Lyanne Alfaro, and we're coming to you live from Times Square, New York City at MarketSite, where I'm joined by Head of U.S. Fixed Income at Nasdaq, Ted Bragg. Thank you so much for joining us.
Yeah, thanks for having me. Nice to see you.
So tell us a little bit about, we saw the record issuance for the U.S. Treasury market. Tell us a little bit about what it means for your supply and why you think that is.
Yeah, so yesterday the Treasury announced another $83 billion in issuance just for this week. So we'll auction 3-year notes, 10-year notes, and 30 years. That ends up being about $425 billion for the quarter and a total for the year of $1.33 trillion. So record issuance, record supply, as you mentioned, and I don't really think you can have any type of bond rally or lower yields with this much supply hitting the market. We have a $1 trillion deficit, and it's starting to weigh on the market in general on who's going to take over all that supply. You have the foreign central banks who have always been big buyers, and I think they're somewhere in the neighborhood of $6.3 trillion. So that number is unchanged, what they've owned. But what has changed is the percentage that they own is much less, so now you need to find new buyers. And the Fed's not a buyer anymore. They've started to wind that down. So it changes the dynamic of who the natural buyers might be at these auctions.
Talk to us about your expectations heading into the key jobs report coming this Friday.
Yeah, so big day again tomorrow, kind of the reason why we're here to talk about it, and we've had some early indicators. So this morning we had the jobless claims number, 214, so in line with expectations. Yesterday there's a precursor, an ADP number, which came out very strong, plus 227. So the thoughts are for tomorrow, a plus 200 number, a 3.7 record low unemployment rate. And what I think everybody's going to want to watch is the work week and the hourly earnings. And really, what does that mean for the Fed and then inflation?
Outside of jobs, what else is the market focusing on right now?
Another number today was the Institute for Supply Management, ISM, like a purchasing manager survey. It declined. And really the decline there, everyone's pointing to the tariffs and trade tariffs. So what are the trade tariffs doing to corporate America? What are the trade tariffs doing to earnings? Is there any type of slowdown now because of these tariffs? That's one component of it. But we've had some very strong earnings. We've had some very, very volatile equity markets. And next week, I think maybe even more important than the payroll number are the midterm elections, Tuesday. So that could also drive, I think, volatility going into the rest of the month.
Absolutely, and we'll be keeping an eye on that. So in terms of scale, how impactful do you think the midterm elections will be?
Yeah, so you have, I mentioned the Fed earlier, monetary policy. Whether the Fed's going to raise rates, not raise rates, inflation. But then you have fiscal policy, and the current administration had some big tax cuts. So we have an additional incentive into the market. If you get a change in the House and Senate, all of a sudden does that change the dynamics for the Democrats? Does it create some type of gridlock in both houses, or does it actually change overall economic policy? And I think all that comes into play in a very short time frame, knowing the Fed also is queued up for December to raise rates again. And then what are we going to do next year with additional rate rises? Right.
So you just addressed this in terms of seeing rate hikes in 2018. What are your other projections for 2018?
Yeah, next month is consensus. I think Powell's already mentioned that, but there's a disconnect in the market and the dot plot chart of the Fed and where they think future rate rises are going to come. So is it only going to be 2? Is it going to be 3? Is it going to be 4? And what's the natural rate that they want to push the market back to? Are we at 2.25 going to 3.5? Are we 2.5 going to 3%? And I don't think that's been decided yet. They've taken out some of the text, and it's really going to be dependent on the economic numbers. It's really going to be dependent on what we see in inflation, labor shortages, price increases, employment gains. Those are going to be the big factors for the Fed.
So a lot still in flux.
Absolutely, yeah, sure.
Now, checking in on Nasdaq Fixed Income, what is new in the department?
Right, so last time I was here, I was talking about some of the new technology, and we're really excited about the rollout. So this month, we'll roll out a brand new matching engine for the U.S. Treasury platform that we run. It's Nasdaq Financial Framework. It's cutting edge technology. And what we're really doing is we're pulling out legacy voice components of the market, or in an easier way to say it, we're starting to take what we do in the equity world and move it into fixed income. And what that creates is something much simpler to use, something that's much more transparent, something that's much faster, and it's something that's much more cost efficient. And once we set that platform, the foundation, off of that, then we can build all of our new products for next year.
Fantastic. Well, we look forward to keeping up with you and seeing what else is new in store next time you're around.
Yeah, thanks for having us. Appreciate
Thanks,
it.
Ted. Thanks for joining us. Nasdaq followers, stay tuned for more coverage right here from the Nasdaq MarketSite. Until next time, it's Trade Talks.